All right, everything I've discussed up to this point was to put you in a position to understand how the IRS is going to try and come at your real estate professional status if you claimed it in the past, and why they're going to come after it. If they come after it and they get rid of it, let's say you were deducting $100,000 of real estate losses a year and you were making $300,000 of AGI a year. Well, first of all, since you're making $300,000 a year of AGI, the $25,000 special exemption for passive rental real estate losses isn't available to you. Well, if they get rid of your real estate professional, all of a sudden that $300,000 loss is gone. You have $300,000 more of taxable income, and the government has a big windfall, plus penalties, plus interest. If you really want to know everything I know about how the IRS attacks real estate professionals, there's an audit guide. All you have to do is go to the website, irs.gov, go to their website, punch in audits of real estate professionals or audit guides real estate professionals, and see what comes up. When you read that audit guide, it is a step-by-step how-to for the auditor to follow to kill your real estate professional status. The auditors know that most likely appeals is going to back up their play. Why? Because appeals knows there's lots of case law out there on this issue, and most of those cases are losers, where the IRS has successfully killed somebody's real estate professional status. So what's the most common way that the IRS comes in and kills your real estate professional status? What they'll do is, if you haven't made a grouping election, they're going to come after each property that you own and make you prove to them, to their satisfaction, that you materially participated in the running of that property. What most people get in their head is they have to meet that 750 hours of material participation, and they'll keep time logs that are amazing to me. 780 hours, 790 hours, 810 hours. It seems like people keep records just to the point where they can get over the 750 hours and then that stops. The problem with that is the IRS is going to go in and parse through that activity, and there are certain things that don't qualify towards the material participation that they're going to toss. The moment they get you below the 750 hours, they're going to yank your real estate professional status. If you've made a grouping election, you would think, the normal person would think, all I have to do is meet the 750 hours test on all of my activities, and I'm going to sustain real estate professional status. What they're going to do is, properties that are at a distance to you in other states, for example, they're going to look at that and say, now how have you been getting over there to take care of that property? They're going to be looking at whether there was property management companies involved. They're going to be looking at whether you had a manager on each property. They're going to be looking at who was actually doing the day-to-day services to make this activity work. If it wasn't you, they're going to try and take it away from you property by property, even though you've made a grouping election. So here's what happens in real life. First of all, they're going to try and attack you on real estate professional status. We'll get into how they're going to do that in a minute. If they can't beat you there, they're going to come after each property. And what they're going to do in practice, they're going to argue that you have to meet a 100 hours of material participation test on each property. This is kind of hard when you've got a single family residence, for example, that may not take that much work to keep it going all year. To mitigate this 100 hour per property test that they're going to apply on you, a grouping election helps, but that doesn't mean they still won't get the law wrong and still come after you for the 100 hours per property, even though the grouping election says you don't have to meet an individual property by property test for material participation. All your properties go to material participation, but I'm talking the difference between theory and real life, what I've seen in audit after audit after audit. This grouping election is made by attaching a statement to the income tax return where you are first declaring that you're a real estate professional. You should also at the same time make a grouping election under Code Section 469C7 Cap A.